of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to be taking a look. Don't worry about my voice, folks. It's the old Palo Verdes. We're almost into springtime mode here. 72 degrees here with a little bit of rain, and that means the trees are blooming, and so am I. So feeling great, just sounding a little different. Let's take a look here. The first chart I posted was the E-mini S&P, showing you the importance of that 40-48 level. We did several videos about that over the weekend, showing you the importance of that number. And folks, Sunday night it hit there. Well, it hit there once on Sunday night, and again on Monday. We hit the exact level of 40, 47.75, one tick under that 382 number, and it rallied 30 points, folks, $1,500 the first time, and then it came down again, touched the number again, 40.48, then went up another $1,000, and then finally this morning on the open, and we bought that 40.48, and we said, you put your stop $100, 2 points under that low, because if it gets hit, you don't want to be in it, and that's the wrong thing to do. And boy, that's exactly what really happened. We also suggested that, if that thing's going to break, what's most probably going to happen is you're going to get one of those really monster 382 rallies. And I'm just going to bring it up here and show you today, because this is exactly what happened. And these are the things that we're going to be discussing on our full day trading session. It's going to be held on March the 8th from 9 a.m. to 2 p.m. New York time. You'll be able to see, this is what we're looking at today. There's where it broke the first time. There was your 382 retracement. Folks, we're very, very close to really strong support down here at that 40 even level. So that's going to be interesting to watch too. And we'll see if that is something we're looking at. It says the chart is blurry. Let me try it again here and see, maybe we can get it up here, see it a little bit more. Maybe this will help. I hope that helps. Al, let me know if it's a little better. Anyway, that was your 382 rally. That was nothing more than a 15-point rally in the S&P, and then we came down really hard. The part of the problem that we talked about this in the newsletter, because folks, we've been bearish Treasury bonds for 2.5 years, and we're going to continue to be bearish Treasury bonds. But you'll notice here is the Treasury bond as we came in here on Sunday night. And remember, we had that big break. If you remember, we thought it was going to hold at 78% level at 26.02. It rallied half a point, and then it dropped. And you can see here, we are within about 10 points of making a 61% retracement here, folks. And if that fails, boys and girls, you do not want to be on anything that's risk-related like stocks or bonds or anything like that. Remember, folks, this thing is a bear market, and it's been bearish for a very, very long time. All we had here, you see this big rally that we had off of this, that was nothing more than a 50% retracement off of the big rally up here at 164. That was a 382 coming off the 177s. So that's really what you're looking at. This market is still looking like it wants to go, a lot higher interest rates. That's not good for consumers because, heck, the price of eggs in Indiana and Terre Haute this morning were $6.99. My sister told me this morning, but she had a 50-cent coupon, so she said it took the sting out of it. I said, oh, Carla, I said, you've got such a wonderful sense of humor. Okay, let's move on here. A couple other of these charts that are really important. Our guest today will be Shane Smolian, the wolftrader.com. But let's look to see where the market really is, folks. Now, remember, the NASDAQ has been the one that's been beaten up the most. So don't give up on the NASDAQ yet. Today's a bad day, and, as we know, markets have a tendency to go up one day, down the next. But here's where we are with the NASDAQ. If you notice here, we have just almost 12,100 is the 382 retracement. Now, we haven't quite got there yet. But what's interesting about this is you can see here we've got this really nice dominant Hurst cycle coming in here. That's just a nominal cycle. It doesn't mean that it's going to work. We've seen this in natural gas and all the others. When they fail, they fail. But you use the pattern, use the ABCD, use the ratio, and that's where you get your possibility of maybe this is going to make some type of a bottom. What I've done now is I've expanded it a little bit so we can see it a little closer, because this is from my perspective, and I look at patterns and ratios, and believe me, folks, I don't stand around when I think I'm wrong. I get out. Fact is, we had a beautiful trade last night, and crude oil was up about $1,500. We ended up making $300. And then we had we were up 30 handles in the S&P. We ended up losing $100. We were up $900 in gold. We ended up breaking even in that one. Okay, now the euro was working good. The bonds were working good. But, some of them didn't work. But we kept the winners and got out of the ones that weren't working. And so that's all it's about. If you focus on how much you're risking, folks, you're going to be far, far better off than if you wonder whether you're going to make any money. Now, I don't know whether gold's going to take off from here or not, but it broke the scenario of what we wanted to see happen. And I'll bring this up here. Those of you that get the videos and stuff, you know where we stand on that, because if it doesn't hold that level, then we know that there's something wrong. And here's what we were looking at. If you'll remember, I want to get this up here to show you. This is the one from Sunday, where the market had closed at 51. Well, we had assumed to be a buyer at 1845. That was a 382 retracement of that. It closed at 1851. Now, we put our stop at 1835. Well, it went to 1839, and then it rallied up to 1852. And at that point, I said, look, if it gets back to break even, it's not doing what we want it to do. If it would hit that number, it should be screaming to the upside, and it's not. And so, by golly, the best thing you want to do is to stand aside and see what happens. So that's all I'm doing. And so I had other positions that were working pretty good. But the fact that if you follow it and keep your losses close to your vest, you're going to be far better off, because you get you lots of shots at it. That's it. The bad part, folks, stop and think here, but natural gas. And I hate to bring this up as a sore spot, because I know there's some people out there, not our people, but I know that some people are still in it that are in natural gas. And all it's been doing, folks, has been going down and down and down and down. I want to bring this up here and show you today, because we hit 211 today in natural gas, folks. We tried the long side at 286, and we were out at 276. Now, if you were still in at 276, you're sitting with about a $7,000 loss. I mean, that's not a good feeling. And not only that, all you got is hope and prayer that it's going to rally back up, and who knows whether that's going to happen or not. I hope that makes good sense, because that's what trading sense is about, folks. Focus on how much you're going to risk, not how much you're going to lose, and you're going to be far better off. We're going to be talking about that during the day trading session. I'm going to be pumping those things to show you that you can reduce these risks down to a small amount, and that's what it's all about. That's my perspective, but I'm only around about half the time anyway. 877-927-6648. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, just for kicks and giggles, I have to put a chart out. This is a picture of, on the left is Norm Winsky. The guy in the red shirt is Arch Crawford. The guy on the left of Arch Crawford, who is that, Tom Cruise? Oh, that's me. And on the left is a bond trader, and for the life of me, I cannot remember his name. This was taken in New Orleans in July of 1988, as I recall. And anyway, Norm was kind enough to send that to me, and I thought you'd get a kick out of what's so strange is I'm the only one that hasn't changed a bit over those last 30-some years. I just don't understand what happened to these other guys, but my goodness, just really hard to believe. Let's get back to the markets. That's enough of the glitzy stuff. Let's take a look here. Here's a chart that's very interesting, folks. It comes from Bloomberg. It was posted, and I thought it was interesting. It shows the status of what people are looking at in the market as far as retail traders. I don't, I just look at charts. That's all I'm looking at. I don't know the fundamentals behind this stuff, and I don't expect to. But you'll notice here that there's a lot of retail traders have been in this market since early January, which was the thing to do. Remember, we bottomed on January the 4th, and we rallied up really strongly up until the, around February the 2nd is when we topped up in there. That's when the Fed came in and started playing their games with the other stuff. So there's a lot of room to go on the downside if this thing fails. But don't give up yet, because if the S&P can hold above that 3960 level, that's a secondary number. But the one to watch is the NASDAQ, because the NASDAQ has been the leader of the pack both up and down. And I'm going to bring this up here because it's really simple to see it. And I believe in these numbers wholeheartedly, and you'll bring it up here just one more time so you'll be able to see it. To me, it's that important. That's why I'm spending so much time with it today. But there it is right there. You can see the beautiful ABCD pattern comes in right there. And this has taken 2 months to do this. So, if you think the trend is down, it's down, sure, for the last couple of weeks, that's for sure. But, since the last couple of months, look, it's still up quite a bit, and we're just basically right at the 382 retracement. Now, we've shattered the one in the S&P. That number was at 40.48. We went down to 40.08, 40 points below it. There's another example. If you're going to buy that and you sit there with a $2,000 loss like you could have done in the natural gas, hello, operator. That's not good. So you got to focus on the amount of money. Folks, the reason why these darn patterns work is because they're based on what natural law is. And a part of that is the Fibonacci summation sequence. Part of it are the numbers of sacred geometry, which are the numbers 1, 2, 3, 4, 5 in the square roots and reciprocals of those numbers. And then when you put them together, and even, you can throw in a 200-day moving average or a 50-day moving average, a 100-day moving average. And the reason why you can do that is so many people are using them, and some people can use them extremely well. Like, Steve does it really good, right? Steve Rhodes. Also, the master of it, of course, is Basil Chapman. Tom O'Brien's really good at it too. Now, I don't do that because I feel comfortable enough to just look at the ABCD moves. I'm a one trick pony, folks. And you know what? They can say whatever they want about anything about that pony, but let me tell you, baby, that little puppy's won more than 1 or 2 Kentucky Derbies over the years, because when these things hit, and they do often, that's it. But you got to focus on when they don't hit, and that's where it lies. Because when I went to, I'll never forget this day, because when I went to very first day that I worked for Drexel Burnham, August the 16th of 1976. The following year, August 16th, is when Mr. Elvis Presley passed away. But on that day, on August the 16th, I sat there with the director there on the Rodeo Boulevard there in Beverly Hills. And he said, Larry, he said, our customers are accustomed to losing money, and they're accustomed to making money. He said, the one thing they're not accustomed to do is losing all their money. And he said, if you drop down more than 25%, you're going to probably have a difficult time continuing your job as running the commodity department. And I said, I've got some fail safes. I said, 10% is my panic button, and I'll stop trading for a while if I hit 10%. I never hit 10%. And I had some good years there from 76 through 82. So, and I did that. And believe me, folks, I had times where I had 5 or 6 resignation letters that they kept. I never did get to keep those, but I was so frustrated that I said, screw it. I'm just going to go off on my own. But I never did. And that's pretty much what we're paying attention to now, looking at some of these things. So I hope that helps. Give you an idea of where some of this stuff comes from, and those of you who've been following me for a long time know that's where it comes from. So it makes it real easy to understand where we are. Anyway, that's pretty much what we're looking at right now. Markets are we bounced a little bit off the bottom. In fact, we're right near the bottom again. We're down 572 in the Dow Jones, and down 70 in the S&P, and down 235. And we're not very far away. We're only 40 points away from the 382 in the NASDAQ. But again, with the bonds getting hit, bonds are down 1.5 points. That's a huge amount. We got notes almost down a full point. And we got gold is down a little. Silver's up a little bit. But the big one is copper. Copper being up 11 points is really contra opinion, folks, because, copper is usually Dr. Copper. Because when copper is up, stocks are usually up, and that's very unusual for copper to be up as much as it is. That's a very, very positive sign from a commodity standpoint, but from an economic standpoint, not so much, because it's pretty hard to keep copper up if you got stocks falling as hard as they do. So that's pretty much what we're looking at. So I hope that helps, gives you some idea of the things. And we got Shane Smolian coming up. Oh, by the way, this coming Friday, we've got our good friend Peter Elides of Stock Market Cycles will be up. He'll be doing almost the whole show, depending upon the time that he has. Always some great stuff to look at. So we want to be watching the things as they unfold. As far as the U.S. dollar, we're short the euro because we're basically long the dollar. That still continues lower. I believe we're going to get down to that 104 level in the euro. That is what our original game plan is here. It's not very far away, but it's hit so many 382 retracements here recently. The last one, of course, was back 7 days ago when we were up at 108. Now we're heading down to 106.5 right now. And when we get to 104, that's going to be where they're going to play games with the euro, because that's going to be a very important 61% retracement and a huge ABCD on the long-term weekly charts that we send out every week, showing you that the importance of that number. That number in the British pound equates to 114, and we're trading at 120 in the British pound right now. So got some big stuff happening here. Anyway, we're going to have our good friend, Mr. Shane Smolian, coming up here at the break. If you have any questions, folks, it's 877-927-6648. And again, I want to mention that we'll be doing the day trading class 9 to 2 on March the 8th, 5 hours straight through. You get several books, a month of the service, 3 PowerPoint presentations, and some great videos. Anyway, that's it. We'll be right back. 877-927-6648 with Shane Smolian, thewolftrader.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, without further ado, I think we have the Wolf Trader on the line. Shane, are you there?
Good afternoon. Is this Duke and Duke?
100 South Broad Street, Philadelphia, Pennsylvania. Home offices, absolutely for sure. How are you doing, my friend?
Doing well, doing well. Coming off.
Oh, go ahead.
Just saying, coming off a nice weekend. We had the President's Day and ready to get started.
Very good. Listen, tell us what's the position of the market here? We're getting banged up today. Is there a bottom in sight somewhere?
Yeah, so that's a good question. I'm going to break this up into like big picture, medium term, and short term because they're all saying a little bit slightly different things. But I think long term we're okay, but medium term we're probably rolling over. I've been talking about this for a while, and I'm going to go through some of what we have on the S&P newsletter just to give people an idea of what we're looking at. So big picture, let's look at the big picture here. S&P, I think the bear market's likely over. The Fed internals are in a buy for the first time since July the 6th, 2021, and the Fed juice is in a buy. So we have the big support here from the Fed, which is important. And I said this before, the Bank of England, the gilt operations was a major shift in what happened with these markets. You had QE, you had a rate hike in QE in the same week. Then we started to see a lot of changes in the liquidity flows across the globe after that point. So liquidity is starting to increase now. And people ask me about the Fed total assets. This is just one component of the Fed juice and the Fed internals. Yes, they're decreasing, but that's not the whole story of what's going on. There's a lot more than just the assets. It depends on what they're selling, what they're buying. So, just keep in mind that because there's so many operations going on now that we have to look at the big picture. I think the big picture is positive.
Okay.
Now, go ahead.
No, that's what someone asked a question, and I said I'll pose it to the master himself, and so I agree with your opinion. So, however wrong it may be, Abraham Lincoln used to say that.
Exactly,
Everybody's got an opinion, but I respect yours, my friend, because hardly anybody does the technical work that you do. So please continue with what you're looking at.
Yeah, and it's gotten a lot harder since they've expanded their operations, and we just really have to track. There's so many inflows and outflows going on. We have to look at the whole picture. But overall, I think it's getting more positive. We do have this positive election seasonal cycle going on, and that combined with the Fed easing and starting to reduce the rate hikes and then what's going on behind the scenes, I think this is a long-term bullish scenario. I think we're probably starting a new long-term liquidity cycle. I think this is going to go on for a few years now. I think we kind of hit the low there in October. So I feel good about this long term. Now let's break this down into three different levels here. So I've got the long term. I think the bear market's likely over, but medium term, we've been talking about this. We had a recent solar storm over the weekend. Now the KP index was 6. That's enough to turn this lower. I was talking about this on Friday. I said I think this is going to push us down. We have a small storm today, so there's a depressive effect going on. It's kind of like a hangover effect going on with these markets. The wolf spread traders short S&P, long VIX, and the BAT finally went short today. So medium term, I think this is getting more negative. I think we've got a little bit more ways down to go, but this could take a while. This could take a few weeks. Short term, I think we could be at some type of a very, very short term level for a bounce. So you can see each time frame is a little bit different, but the main thing is in the big picture, I feel pretty good about this. I think this solar storm, it kind of puts the markets in a funk, and it has a delay. Now, for those of you who don't understand what I'm talking about with the solar storm, essentially there's these solar storms that come off the sun. They take a couple of days to get to the earth, and they have a negative effect on markets. And the Federal Reserve actually wrote about this. The Federal Reserve of Atlanta wrote a paper on this. So this is a real effect. It can be measured, and I think that's what we're dealing with today. Okay, that's part of the effect. Plus, we have these other indicators rolling over and these medium term. Now, the fear and greed index is still pretty high, even though we have this rollover today. It's still pushing up around 64. And the overall sentiment, if we look at the big picture, now the fear and greed index is kind of like a here and now index. It's just really near term. But if we look at the big term picture, I talked about this before the year started, there were a lot of bears. It was very hard to find a bull anywhere. So I felt that was definitely a contrarian indicator to look at. Now, we're going to look at the geomagnetic activity here. This is the breakdown here. This is the NOAA KP index. And so what this does is this looks at the intensity of the storm. So right now we are in a G1 storm. And I think that's what's going on with the market. The market's just having a hard time coming out of that funk today. And if we look at the trading scanner, this is the trading scanner that we post daily. The polar R-squared is actually, at least right now, it's on pace for a buy in the S&P. That could change by the close, but it's on pace for a buy. The BAT is, this is the sell, the trending medium term, but the two short-term indicators are in a buy right now. So it wouldn't surprise me if we do get a little near-term bounce, but long-term, I do think that, or medium-term, I do think that we are likely headed lower. Now, this is the Wolf Spread Trader, where we look at a spread between the E-mini S&P and the VIXY, and this went into a sell on February 14th. So you can see here, This is a pairs trade. So this is meant to be, if you're long S&P, you're supposed to be short the VIXY. If you're long VIXY, you're supposed to be short S&P. So this turns. So this is a very good indicator. I like it as a medium-term barometer. So this went sell on the 14th. So I think ultimately, medium term, I think there's a good chance we're going to be headed down to probably the 38.48 level, which I'll get into in a minute. Now this is an intraday chart here, and this arrow right here, this purple arrow here on the chart, this arrow indicates when the Fed internals went into a buy here. Okay, and so you can see the market starts to get some support here. This is when the geomagnetic storm came over the weekend. So you can see we're starting to get a little bit of selling, but I don't think it's going to be anything crazy like a market crash or anything. But I just do think it's having a depressive effect on the markets right now. And this is not a surprise. I think we were able to forecast this pretty well. I mean, I was these storms. It's not like a hurricane. It's kind of weird. Like they'll make a forecast and it'll shift a lot. They might forecast a KP of 7 and it becomes a 5 or something. But I think this one was pretty good. It happened on a Saturday. So, it's carrying over. There are some divergences, which I've been watching. One of them was the money flow here. This is just something I like the money flow a lot. It's a very simple indicator here. This is a money flow down here, and this is a money flow of 5. And what we've been watching essentially since right around this 3,900 level down into here, as the S&P has been rising, you can see the money flow has been diverging down. And this is a good indicator. It's pretty good in terms of finding a divergence. And the market will likely try to come back at least to this 3,900 level here. We're getting pretty close to that now, actually, as it's going down today. But
no kidding.
Yeah. But I do. Yeah, the problem with divergences is, though, they can go on for a long time, and you just don't know when they're going to happen. But they do resolve. So I do include that for subscribers. I do point out to people too that the 50 moving average, the simple moving average, has crossed above the 200. So this is a bullish sign. This is positive. Even if we come back and test that 38.48 level, I still think this is a bullish sign for the S&P that things are getting better. Now there's a chart here. This is the one that I've been talking about. This is a huge divergence. When I say huge, I'm talking on the medium term. But when this happens, so this blue line here is the Fed internals. Okay, so this is what's going on with this is what we track from the Federal Reserve. When this happens, when you start to get positive divergences like you see here, and the market falls, the market tends to come back and retrace up to that level where the divergence starts. Well, the same is true to the downside. So
we got to take a little break here and pay a few bills. Stay with us, okay?
Sure, absolutely.
Shane Smolian, WolfTrader.com, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're talking with Shane Smolian, thewolftrader.com. Please continue.
Okay, so this is the Fed internals. This is really important because this goes into the buy on 1028. We cover these long-term short positions pretty close to the low. We were a couple days away. This is from going back to December 2021. But right here, there's a divergence that starts to form here. You can see this is pulling back, and the market was going up. So the same thing is true on the upside. This divergence starts around 38.48 right here, and this is where I think we're going in the near term on the S&P. I think we're going to 38.48. Now we might get a bounce tomorrow, but I think ultimately, I think that's the level to watch for the S&P. I don't think we have some kind of a big crash or anything coming, but I do think that it is important to watch that. And yeah, so that's what's going on there. So long term, the Fed is still in a buy. We just have these medium term sell signals coming up. Tomorrow is a relatively positive day for the S&P statistically. I'm just showing some of these statistics. So tomorrow can tend to be a positive day. So I think there's a chance that we get some type of a short-term bounce tomorrow on the S&P. Now, I brought back this CAT grid. This is a grid that I used to. I put 4 different trading models together that I think are independent, so they're not like overlapping. Because sometimes, like if you look at technical indicators like rate of change or stochastic, they're kind of all saying the same thing. So I took 4 different models: solar cycle, planetary speed index, quad lunar cycle, and general combined transits, and I put them together. And you can see on this combined grid here, you can see when they overlap. And so we are out here into Tuesday, and you can see that they're starting to agree now that we're getting a lot more red activity on the S&P. So this makes sense that the S&P is starting to head lower from this standpoint and the solar storm. And I think this could continue out probably for the rest of the month. I mean, I feel like this is a mild pullback. I don't think this is something too massive to be worried about. I think this is a healthy pullback coming, but this is something we've been talking about. And what I actually do is I take this graph, these combined graphs here, and I put them together and to make one forecast graph. So this is actually what's in the S&P newsletter, because these models don't always agree. So I try to combine them together. And so you can see that this is calling for, actually right now it says we're at some type of a short-term low, but it's still relatively depressed for the rest of the month of February. So I still think there's a chance that we're going to hang out there and probably try to get back to that 38.48 level. It may not get there. We might get to 3,900, but I think ultimately that's probably where this will happen. And then, if we can get down to that 39 or 38.48 level, I think there's a good chance that could be a pretty solid low for the S&P. So that's just kind of how I feel about that. So do we want to talk about gold and Bitcoin?
Yes, sir. Gold specifically, we have several questions about gold. So please tell us what you're looking at here at the precious metal.
Okay, so big picture. Now, I put gold and Bitcoin together because I think these two are intertwined with their fate and their destiny, and this is going to go on for years. I don't think this is something that's going to this battle between the two of them, and at some point we're going to get some type of a resolution between the two of them. But right now, I think the bear market has likely resumed. I think we're at the end of a positive seasonal right now. This is coming up in 2 days, so it's already selling off ahead of the peak. What that is that's called a negative divergence, and when that happens, it's very bearish. It's a very bearish sign. So, I mean, we were on top of this ahead of time, but this is not good for gold. Gold is lower on the Jupiter cycle until about the year 2025, and then the Saturn cycle until about 2028. So we've got a few years here. Probably gold's got about 4 or 5 years where it's going to have some issues. I don't think we're going to get like a massive crash or anything. I just think it's going to continue to head lower, chop lower for a few years here. And gold is very choppy to begin with. But one thing I would tell people right now is because we're at that seasonal peak, we got to be careful because when these cycles line up to the downside, things can get pretty bad. Now, in terms of Bitcoin, this is what we talked about back in January. I told people, I said there was a negative divergence here. And again, I'm very big on the divergences because I think they're very important for long-term forecasting. Back in January, this worked off the divergence, and I told everybody, I said this in the newsletter and everything, I said, I think we're at a low here. It has worked off all the divergences. There's no more divergences to work off. And this is the normalized MACD. This is an indicator that we use for long-term forecasting, and Bitcoin has taken off. And the opposite is true on gold. I mean, gold's got this big negative divergence going on, going back to like 2007, 2008. I think it's got to come back. I think this is where it's going. 1100. I think it's got to come back to this level.
Whoa,
into here.
time out, operator. You said 1100 in gold?
Oh yeah. It's going to take a few years to happen. It's not going to all happen at once. And again, I'm not saying it's going to go to 200 or 400, something like that. But I do think we've got a ways to go on this, and I think we're just getting started with the downturn here. And again, this is going to be strongly and closely tied to Bitcoin. And I think Bitcoin has a chance to be a very strong risk-on asset this year, along with the S&P. It'll probably lead the liquidity cycle that's going on right now. Now, this is gold in terms of solar cycles. So this is what I warn people about. We're actually at coming up to some type of a peak here, and the fact that we're selling off ahead of that is not a good sign. So I would be very careful about gold into here, particularly from the 23rd to the 16th. This is a very seasonally weak period. But the fact that we've already sold off is important. Now, the next graph I want to show you is the graph that we talk about all the time, which is the pairs trade between Bitcoin and gold. Now, I'm always going to talk about these two together because I think they're intricately tied. There's these two warring, polarized camps on this. There's strong crypto people, strong gold people. What I care about is the ability to forecast these two using this wolf spread trader. This thing goes into a buy on Bitcoin on January the 10th and a sell on gold on January the 10th. And so this has been very good at forecasting what is going on. So, and this is still, if you look down here at this histogram, it's still showing a very, very strong emphasis to being long Bitcoin right now and short gold. And that makes sense. If you go back to that solar cycle that I just showed, we're just coming into the worst part for gold, and it's already selling off. So I just think that right now with the liquidity starting to return and the Fed starting to slow down on the hikes and what's going on with behind the scenes with the Fed, this is going to make a nice environment for crypto right now. I mean, I just think that's a very good trade to lead the S&P higher eventually here this year. So here's another look at gold. This is a chart that's showing the Fed juice, which went into the sell on February 1st. The quad lunar cycle is going into a sell today. And then right here, this line, this red line that you see here, this is the actual solar cycle. So I overlaid on top of the chart, but you can see we're right at that peak here. And gold is already selling off, so that's not a good sign for gold or gold bugs. So I would just urge caution here. I know a lot of people really like gold, and they get excited about it, but I just don't like it. I mean, I don't like it for the next 5 years or so. I think, and I've looked at many cycles. Sometimes you look at these cycles, and the 5 years different than the 10-year, and they're all saying the same thing. They're all saying gold's going down. And I just think that probably the earliest would be 2025. I do think this is where it's going. I think we got to get down to that 1,100 level. It could even go down to 1,000, but I don't really, if it gets down to that general level, I think that's a good place.
Wow. Hey, stay with us, folks. We have the Wolf Trader coming back. I have one more question about Treasury bonds if you have the time.
Sure.
We'll be right back, folks. wolftrader.com, Shane Smolian.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, as we're making new lows here in the stock market today, we are also making new lows in the Treasury bonds. What's your feeling here, Shane? This thing doesn't have any friends at all.
Yeah, I mean, it's making this sell up. I want to show this graph here, which is the 10-year solar cycle. This makes a peak typically around the first of the month or the 30th of January. Then it comes down into this 215 period. I think we're in this trough right now. I think we're getting near some type of a low. I don't think these are going to go down much more. I can't see it. There's too much debt out there. It's getting expensive to service. If you look at the annual, this is the solar cycle for the year on the 10-year. That we're actually, if you look at this chart, we're right into here, into this little trough into here, and then it just takes off. And it goes up all the way until like the middle of May, and then has another peak in August. So I think there's a very good chance that this is going to try to rally now going into the next, probably the next 6 months or so. I think there's a good chance of that.
Well, that's going to be an interesting one. Tell the folks how they can reach you, Shane.
Well, you can reach me at wolftraderfutures.com/plans pricing. We also have a Patreon page. I started this little summary each week called Wolf Trader Radio. It's on the YouTube channel where I summarize what's going on in the week. So if you want to head by and check that out, you can. Each Saturday, we do a webinar at 8 o'clock in the morning, and we talk about a different trading system or outlook or something on the market. So it's a good time to show up. You can interact, and you can ask questions, and we can go over any topic that you want to go over. So we do that every Saturday at 8 o'clock, and so we hope to see you there.
Hey, listen, thanks for joining us. We'll have you on again soon, and stay on the green side of the grass and live in the dream, my friend.
Thanks, Larry. Have a great day.
You bet. Shane Smolian, folks, wolftrader.com, and we will see you on the flip side tomorrow, folks. And be sure you do something nice for your neighbors, folks. There's a lot of people out there that are having lots and lots of trouble, and anything we can do to help is great. So we'll see you tomorrow.